All right, guys, what is going on? What is Gucci gang? Hope you guys had a good day so far. We'll go over a few things today. We'll have some fun. Know what I'm saying? We'll rock out a little bit. You guys ready? My camera's a little bit off, but that's all right. I was messing with it this weekend. I was messing with the camera this weekend. Couldn't really find something I wanted. But anyways, drop a like if you guys are ready to go. Be ready to learn how to be accurate. You know what I mean? That's what I teach you here, man. I teach you accuracy. Excuse me, precision. Precision. Right? Directional bias cleaner than Mountain Valley, dog. Right? What did you guys do this weekend? Did y'all complete the weekend reflections document? Were you guys able to do that? No, John, you know, I had all this shit. I had things to do, John. Scott said I kept my fingers. Well, not everybody was able to do that. You know what I mean? Anyway, what's good? Felix, Scott, Fernando, Ram, Torty, Mason, 2020, Willow, Lewis, Marius, Eddie, MJ, Shay. They need to sponsor you. That was clean. Honestly, if I was going to be sponsored by anybody, I would want to be sponsored either by Rain or Ghost. I feel like either one of those two would work. If it's going to be water, it's going to be Saratoga. But I don't even know if they do sponsorships. I don't have enough followers for that anyway. I still can't get 100 people on a live stream. Even though I'm giving out free money every week. I don't know what it is, dog. I'm giving out free money. Still can't get people to show up, bro. I don't know, man. At this point, I must be shadow banned because I cannot figure it out. I can't figure it out. Baby Pips was at the beach with the grandparents. Wifey and I came home early. Nice. What's good, Edmundo? Okay. So there's a lot that we could do here. You know what I mean? And that's what's amazing. When you know a lot of shit, when you trade a lot of ways, you can go over whatever you want. There's so much to do. Now, obviously, we can't do it all, but I want to give you some. Okay, I want to try and give you something. All right. So the first thing, let's go over to some obscure asset that we don't ever do shit on, like VIX, for example. We never look at VIX all that often, so there's no markups over here, which is fine because that's what I want. Okay. Now, this was not intended to be a timing tool. This was not intended to be a tweet. Excuse me, it was intended to be a tweet. It was not intended to be a timing tweet. I kind of thought Dollar might respect this idea, but this was July 3rd. So that's not ideal for trading. All right, the day before a holiday. Okay. So again, this was not meant to be a lesson. This was not meant to be, you know, something that's like, oh, hey, you should take a trade right now. You know, trading right before the 4th of July, that's just not good, right? Appreciate that, Willow. But hey, like like we say all the time, right? The old adage, you can lead a horse to water, but you can't make it drink. Not everybody wants to make money. It's as simple as that. People would rather struggle and then bitch about it because it's what they're used to. They think they hate it. They really don't. They love the attention and the drama. So, but anyway, we're not here for that. Trying to learn you something. All right. So AMD, this is not new. This is not something that I created. This has been around for a long time. Yeah, I agree. A lot of people are scared of commitment too. Luckily none of my exes are around here, but whatever. Anyway, AMD, okay? Accumulation, manipulation, distribution. So some people call this the Power 3 concept. Some people just call it AMD. And in case you did not know, that indicator, HTF, high time frame, power of 3, that is the indicator that I think we put on the chart like last year because I thought it was pretty cool. And that displays the daily candle, right? Or whatever candle you want if you mess around with the settings. So the whole idea of AMD, accumulation, manipulation, distribution, that can also be seen in a candlestick. Okay, so don't let me lose you here. And yes, we're going to get to the charts. And yes, I'm going to show you why I sniped ES today. And I gave it to you beforehand. So we're gonna get to the good stuff. But we got to get through some notes and stuff because I don't want to just show you like, oh yeah, look what I can do. Y'all already know what I can do, okay? It's about you being able to do the same shit, or if not better, right? But before you can get to the highlight reel, okay, you got to go through the practice and the repetition, and that's why we do these things. Okay, so back to what I was saying. And let me clip this too. I'll probably turn this into a clip. Okay. Is everybody still here? Can you guys drop some ones in the chat? Just let me know that you're here. Because sometimes it like freezes for a second. And that used to fuck up the volume. I don't have that problem anymore. I mean, I got a new CPU. I shouldn't have that problem anymore. Okay. Thank you for that. Okay. So AMD for short, accumulation, manipulation, distribution. Okay. That can be seen obviously in the candlesticks, which it hasn't really done anything like that here. But we're over on VIX, so there's no notes because I have a lot of markups over on ES and the indices. So AMD, based on like a higher time frame candle, weekly candle, monthly candle, quarterly candle, daily candle. Okay. Accumulation. Okay. Like, say, for example, if this is an up candle, accumulation at the open, manipulation lower, distribution higher, right? It's like a 3-part move: open, trade lower to go higher. Or in the example of shorts, right, it would be accumulation, manipulation, distribution, right? Something like that. Okay. It's general. It's not really like my favorite way of viewing the marketplace. It's just, it's an idea. It's a concept. It works. But I used to teach this a lot as like the razzle dazzle, if you will. So anyway, what's good, Roger? Accumulation, manipulation, distribution. Okay, so are we all good with that? It's going to be seen in the candlesticks. So this is kind of a shitty example, but say, like, if we just kind of toss this to the side, say something like this: consolidation, manipulation, distribution. I mean, that's a pretty fat gap, but price action wise, you kind of see what I'm saying, right? If we look at this little image here with the boxes, accumulation, magnet tool is kind of throwing off my shit, manipulation, then how do we do it? That way, right? Like that. See that? It's just inverted. Accumulation, manipulation, distribution. Okay, drop some threes. We're gonna skip 2 because AMD is a three-part thing. Drop some threes in the chat if you guys are with me. Accumulation. Actually, you know what? That wasn't even supposed to be intended, but that pretty much aligns with that too. Okay, I did not try to do that. I didn't even look at VIX at all. That's just luck. Okay, so don't tweet or don't screenshot this thinking like, oh, he called that out. I did not. But that lines up pretty beautifully. Accumulation, manipulation, distribution. Or the inverse. Accumulation, manipulation, distribution. Now, the problem with concepts by themselves, the problem with ideas like this by themselves, anything by itself, you're going to be trading a pattern for pattern's sake. And that is not the idea. That's not the idea, right? Just like we don't want to take every imbalance. We don't want to take every inversion. We don't want to trade every mitigation, right? Because it's too, I don't want to say random, but it is too skewed. You're going to take wins, you're going to take losses, and it's just not going to be good trading. It's going to be machine gun trading. It's not going to be sniper trading, right? So what we're looking for, okay, as always, is either higher time frame bias, higher time frame price levels, or at a minimum, some sort of roadmap, okay? Now, oh, that brings me to a good point. There was something I was trying to write down and I forgot, and now I am reminded. It was Roger. Is that the same Roger in the chat? Yeah, Roger Ruiz. Okay, perfect. I'm glad that you asked that because now we're going to use that. So about 11 hours ago, Roger asked in the market review from last week, the 3rd, that Thursday, he asked, when do we switch our perspective from equal highs targets to equal lows? So instead of looking for buys or longs, when would we switch to look for sells? Now I woke up, that was the first thing I looked at, and I answered it, and I said, higher time frame bias and market maker models. That was 3 hours ago. Well, probably closer to 4, but that was right. Now, Roger. Okay, this is why I'm glad you asked that, because what do you think I'm going to show you now? What do you think I'm going to show you now, big dog? Right? Either higher time frame bias and or market maker models. So what is a market maker model? Now don't go anywhere. I just want to pull something up. Okay, I found it. Okay. So in this particular case, right, what do we have? We have a buy model. Yes. And what is the inverse of that? A sell model. So if the market were to have some consolidation, some equal highs or low resistant highs, we would essentially wait for distribution, you could trade those, but if you're in accumulation or reaccumulation, that's what you would expect. You're like, oh shit, I'm in the second half, right? I'm in the buy program. We've already had the sell program. The low's already been set. Now we can trade either the accumulation or the reaccumulation for the run higher, right? That was the trade I think I showed you on Tuesday. That ES trade, it was a 1-to-1 RR, but it was like, it was a good trade. It was 10 points. It was easy. Okay. So the same idea can be said for the opposite, right? The same can be said for the opposite. A market maker sell model is where we have consolidation, equal lows or low resistant lows. It just depends, right? Then we'll see accumulation, reaccumulation. We'll see some sort of manipulation. Then we'll see distribution, redistribution, and a run lower, right? So when we take that off, okay, when we pull up a chart, and we were here this morning, right? Because equities open is like right here, right? See that little spike right here? That right there is equities open, 6302. There's a few things I brought up last week. Where is price at right now? Where is it going? Where is it coming from? Do you guys remember that? Where is it right now? Meaning whenever you get to the chart, where is it going? Where has it been, right? What are we coming from? So if we look at this chart here, right at 8:30 or maybe 8:45, whatever, if you're looking at the chart from right here, okay, we zoom out a little bit. There's a lot to look at. So what can we see? What can we see? All right, well, we're right here. So currently, right at equities open and after, do we have a range? Yes, because we're kind of like in the middle of a range here. What is the range? Well, we have a high here, right up there, right around 63.15. Okay, we have a high right there, and we traded off of it. We have a low right here and a series of higher lows right there. So right now we are working within that range. That's the highest high. That's the lowest low. Okay. Now, obviously, yes, there's some stuff down here, which we're going to talk about, but it's the most immediate price range from here. Okay. You have to ask yourself, how did we make the highs? How did we make the lows? All right. I'm going to show you, if you can, don't let me forget, I'll show you an advanced mitigation concept. Just don't let me forget. Okay. So remind me if I don't show you, because it's pretty badass. But anyway, how did we make the high? Did we create a high and then create a slightly lower high and then sell off? No. We made a short-term high, traded lower, and then made a higher high here and then traded lower. So that by itself is what? Is that a set of low resistant highs? Or is that high resistant highs? What did I give you in the free beginner series? What did I give you? I gave you all that. I gave you like 6 different things. High resistant highs, high resistant lows, equal highs, equal lows, and then low resistant highs and low resistant lows. Two of them are stops. The other 4 are targets. So thank you, Willow. Yes. This high and then a higher high before the sell-off, that is high resistant highs. Okay. Now, I did teach you this in the mitigation model video. I'm pretty sure that's about an hour and a half, or excuse me, that's about a year and a half ago. And I'm willing to bet that I taught you what the high probability mitigation is. It's not just high, low, higher, high. Yes, that is part of it. And of course, you can have mitigations that are within a range too. Okay, I know you're not going to write that down, and we'll wait a couple weeks and I'll tell you, yeah, remember on the 7th I told you that? Because we do, that's all I do here is just I told you so. But what's a high probability mitigation? High, low, higher, high, right? In like this particular case, yes, but the higher high also did what? What's that? What is that right there? That from Friday the 4th, because it closed early, right? On that Friday the July 4th, right? Sunday's gap is up here. We're still on electronic. We have not even looked at regular trading hours. Huge gap up. And then, you know, we traded and then consolidated here. But what is that? That is also taking Sunday's high. A high, I'm going to say this like once or twice, okay? A high probability mitigation is this one. It's not just the formation by itself. If that formation also takes another previous high or runs into like a higher, this is like pretty much all-time highs almost. If this runs into like, say, a daily imbalance or like a 1 hour imbalance, and this is a 5-minute time frame, if it's taking out traders and rebalancing price at the same time, that's high probability, right? Smart money efficiency is what I call it. That's what I named it. Okay. That's what makes this mitigation high probability. Not just the formation, but also something on the higher time frame. Okay. So now let's take a few steps back. Let's refresh our mind a little bit. We're here. How did we make the high and how did we make the low? Well, we just got done explaining or going over how this is a higher high and it took Sunday's high and traded lower. So the probabilities are we're not going to trade above that high again. Not now, at least. Right? Okay, cool. So if our high is what John gave out a long time ago in the free beginner series, that would be a stop loss, right? Very specific, no ambiguity. How did we make the lows? Well, we have a low, then we have a higher low, and then we have a higher low, and then we have a higher low, and then we have another higher low before the move higher. So this was also what? Consolidation. So if we have a consolidation, we traded higher, retracement, higher again for manipulation. Oh, what is that starting to look like? What's that starting to look like? The consolidation, we had traded higher, something on a higher time frame. In this case, Monday's trading like Sunday's high. No problem there, right? So then what do we expect? Well, we should go long because the trend is higher, John. Fuck no. No. We should trade lower. I can't stand this tool now because when you click too long, then it comes up. I can't move it. I'm really not starting to like that tool anymore. But there it is. Okay. Consolidation, run higher, boom, manipulation, low risk short, traded lower, right? And then that short-term high here got taken. We traded lower, bam, right there. There's my entry. There's my second one, rather. There's my second one right there. That imbalance, that little wick right there, that's my entry. That's my entry. My re-entry. Because I did take a break even, and then I re-entered. And then, bam, we traded right below those lows, did we not? Boom. Okay. Look at that. Look at that. 6289.5 is my target. I'm going to tell you why in a minute. I also included in that same message at 9:15, 6283.5 is the gap fill. That was also met. I didn't send the message like right then and there as at 10:46, but it wasn't meant to be like a time thing. But all in all, or we could probably move that over here, I guess, just so we could fit it on the screen without having to like warp shit. But there it is. Okay. I'm telling you the target, and then a few minutes later, that's the imbalance that I'm re-entering on right there. Perfect. We trade lower, up candles should send price lower, because in a bear market, up candles get respected. How do I know which up candles to use, John? Boom. Gave it to you again. Then we trade lower and lower, and eventually 6283 is done. It's actually right there. But I tweeted, or I messaged the Discord at that time. You see how hard that is? Find the liquidity, trade in that direction. Yeah, Eddie, you like that? You like that shit? Where's Roger at? You like that, Roger? Because you asked. Then I told you. And then I traded it too. Man, John, you give out all this stuff for free, dude? Man, John, golly. Golly, John. All for free. Why do you do that? Why do you do that? And then that same tweet is over here on ES. And again, that was not meant to be timed or anything like that. But accumulation, manipulation, distribution. Okay. And then I took a screenshot and posted it, because now we get to the fun stuff. If you haven't had any fun already, if you haven't had any fun, you're a fucking liar. I know some of y'all are smiling. Some of y'all are going, hot damn, John, you're a fucking genius. I'm not a genius. I just been a retard so long that I had to fix my mistakes. That's how you become a genius. You start off as a retard, and then you fix all your mistakes. Okay? So what did we talk about earlier, chat? What did we talk about? Accumulation. Manipulation. Right? Distribution. Okay? Or I guess if you want to, like, you can, honestly, you could draw it however you want. I don't even think it fucking matters, to be honest with you. I really don't think it cares. It's just a concept. Boom. Accumulation, manipulation, distribution. Yeah, that's what we need. We need a t-shirt. We need a, what do you call it? Mouse pad. We need a mouse pad. I told you so. Again and again and again and again. Yeah. You know, how consistently do I say the shit, right? It does make me look arrogant. I'll give you that. But if I'm so consistently saying I told you so, I told you so, right? That's the consistency of the market, not just me. That's the market's level of consistency. All right. Now, let's zoom out. Let's back up a little bit. Okay? Because there's still a couple more things. And I think you're really going to like this mitigation tool. The advanced mitigation tool. I'll show it to you. I really don't use it myself, honestly, but I'll still show it to you anyway. There was something from last week. I deleted everything already. But do you remember last week? And we had that Sunday's gap, and then we had that low on Monday. And then we had those Tuesday lows. And then Wednesday never took any of that, and then we traded higher instead. And then Thursday we rallied. And this, I'm pretty sure this is all-time highs. Thank you, Roger. I appreciate that. And this is all I do, bro. I've got more chart time than, I don't know, a lot of people. All those higher lows, and then you have this too. So you have all-time highs, basically. You have lows right before that move, and then you have all the lows from back here, including Sunday's gap. So now, while I may not think that we're going to run down there today, I mean, it's possible. I don't think we will. But it just goes to show that that small level of liquidity, there's also a set of higher lows here from Friday. You have that too. I didn't call that out. I didn't even expect it, honestly. I took my little 10, 11 points and just said, all right, I'm done with that. I'm not holding a runner. I included that in our discussion today. I'm like, I'm not holding for Sunday's gap or the whatever gap. I was like, I'm not holding for that. And I didn't. But you can see why, right? That AMD right there, market maker sell model, lovely. And then you have, again, Friday's lows in here. And then Wednesday's lows, Wednesday and Thursday, rather. And those are the lows right before that big run up. So this to me was basically an attack on some trailing stops, right? I mean, look at the last few weeks. Remember this whole time I've been screaming to you, I'm bullish, I'm bullish, I'm bullish, I'm bullish. And we've been just mega monster rallying higher, just straight Corvette candles higher on the daily time frame. Remember that shit? That whole thing the last couple weeks? Right. The market's only going to go up for so long before it's ready to, you know, pull back some. So in today's case, yeah, we saw a pullback. That's why I was looking for shorts. I don't think I wouldn't long this here. I wouldn't think like, oh yeah, this is an imbalance, I'd long that. I'm not longing that. We still have this shit down here that I could see us trading down and into. So that's why. Okay. So that to me was a little bit of higher time frame bias. All right. Context, right? Understanding not just AMD. I mean, I hardly use AMD. Really, I hardly do. But when the idea is clear to you, when the market maker model is clear to you, that's what makes trading easy. Right? What's the title of today's stream? Textbook plays probably should have said makes for easy days. That's why I bought books on writing. I'm not the best writer. Textbook plays make for easy days. Easy day. Real easy. Right? What did I think it was a screenshot, not a chart. Okay, there it is. I'm short on a 1 minute inversion here. That's why you see me entering there. We did trade lower. A new low is a partial and break even. I'm not going to partial. I was holding for down here. So I end up getting break even. No problem. We tapped up. That's that same imbalance that I showed you. It's trading off of it a little bit on this 5 minute. I said, okay, bam, that's a short. In, wicked in, straight lower, a little bit of pullback, no big deal. We got those up candles. Then we slam lower, and then 89.5 is the exit. Wicked in, wicked out. Right? Wicked in, wicked out. Now, I know obviously we're very, very lower. But it just goes to show that when you trade, okay, let's come in. That was right here. See that? That is in the direction of opposing liquidity. All right. Now, here's where, if you had not had any fun today, this is where the precision gets unfucking believable. Okay? Are you ready for this? I may have shown you this before. It's a great tool. I don't use it very often. Okay? And I'll tell you why. But let me just get through this. Watch this. Okay? Are you paying attention? We got 50-something people on here. Are you paying attention? Because this is where it gets scary. This is where it gets... Like, you thought the entries and exits were good. I mean, they were, but this stuff gets way, way, way better. All right. 6283.5 is Sunday's gap. Okay. Are we all on the same page here? That's real easy. There's Friday's close. There's Sunday's open. The low end is 6283.5. So none of you asked why my exit was what it was. None of you asked. I'm going to tell you. Okay? Because again, sometimes people are too new. They don't even know what questions to ask. It's okay. It's not an ego thing. It's just the truth. Why would 6289.5 be my exit? Because that was below the low. And it was not just below 50%, but it was the 75% level. Or the 25% if you did it the other way. It's just 3/4 of the way into the gap. Right? We have the upper half, which is our premium. Oh, that's a good fucking point too. I didn't even think about that. You didn't even think of it, John? Bro. You know how many concepts we have here? You can't think of everything at fucking once. Come on. Premium discount. The 75% level is right there. Or 25% level if you flipped it. Right there. 6289.5. That's why the exit was right there. Could I have held for the gap? I could have. I didn't. I didn't want to. That wasn't part of the plan. I could have exited one, held the rest for 83. That wasn't part of the plan. I told you, man, a lot of the times I like getting out just 1 or 2 ticks below the lows. Or if I'm trying to long, like 1 or 2 ticks above the highs. I don't need the entire day. I don't need the entire day. Okay? If you try and catch the entire day all the time, you're going to be frustrated because you're not going to catch them. Sometimes, but not all the time. Just take what you can get and leave it at that. All right. But anyway, this is the part where you need to pay attention. Now, the whole point of me showing you this wasn't this, wasn't this, wasn't this, but 62, 83.5. Okay. Let's come back. We got to come back a little bit. The mitigation. All right. Now, I explained what this was already. Why is that high probability? Because it wasn't just a run above this high. It was also a run above Sunday's high. You see that? So if we mark up both 63.11, 63.13, the market, when it rallies in the pre-market here, it takes both. We drop down. That's the low risk short. There might be the inversion model up there somewhere too. It's possible on a 1 minute or 2 minute. Then we slammed lower. And then look at these here. That initial spike at 8:30, where's it not going? It spikes above the mitigation. The 15-minute probably has all this shit together. But on a 5-minute, that's cut with that Jesus candle, that cross candle, whatever. 850, where are the bodies at here? The wicks trade outside of the mitigation. Not a problem. There's a little imbalance right there. No worries. Deep premium. But the bodies are staying within the realm of the mitigation. Then we traded lower. And then again, not trying to like beat a fucking dead horse here, but that's my entry. Was here. The re-entry, sorry. When a concept is created off of another concept, that's a high probability entry. You're not going to write that down either and then forget. What's a high probability entry? What did he say? We'll get off TikTok and come back. Okay? I just feel like talking shit today. When a concept is created off of another concept, that's a high probability entry. Now, here's where the precision gets fucking unbelievable. All right? And again, I don't always trade this way. I want to preface that and just make sure you know. I want to make sure you understand. I don't always do that. This right here I'm about to show you. The manipulation leg. Okay, what is that? The manipulation leg is from the lowest low. Those are the same. Right here. Okay? So that right there, I want to make it red. I want to make it like just a thick line red. All right? The manipulation leg. Whatever that is. I don't do the math. Okay? It could be 10, it could be 20, it could be, I don't know, 11 and a half, whatever it is. That range, okay, projected lower. Okay? So sometimes people message me and they're like, oh, John, you know, do you use fib extensions or, you know, projections and shit like that? Not really. But if I was going to, I would do it this way. Okay? And it is backwards. Yes. So if we're going to use a fib extension, right? From the high to the low and then back up to the high. Okay? Just like that. Damn it. Okay? Just like that. So, easy example, right? The very first extension lower is that right there. 62.94. All right? Now, before I continue, we did 3. Drop some 4s in the chat if you guys are with me so far. All we did, we understood the mitigation for all the reasons that I already gave you, okay? We understand that this is the manipulation leg. It's the low up to the high, okay? That's all it is. We're taking that range and extending it down. All right? Well, John, that's not very precise. That wasn't even below the lows. Man, that kind of sucks. Okay. What's that third one down there? What's that one right there? 6283.5. Oh. Oh. So the Sunday gap fill and the second extension are the same fucking price level. Oh. Well, yeah, that's pretty fucking precise. That's a pretty precise extension. Yeah. It's perfect. Oh, God, John, there you go with that P word again. They always say there's nothing perfect in trading. I'm not they, am I? I'm not they. The manipulation leg lower, projected once is that level, projected twice is 62.83.5, which is the same, not a tick difference. It is the exact same level as Sunday's gap. Mm-hmm. Oh man, but I don't know, man. That's skeptical. But you didn't talk about 6283.5. Yeah, I did. Yeah, I did. It's in the Discord. I told you that was Sunday's gap. Or the gap fill, rather. Right. So I did talk about that level in advance. I know. I know. It's scary. It's unbelievable. It seems like it's fucking weird ass shit. What do you expect? No VWAP. No volume. No, what do you call it? No book map. No, nothing. None of that sideways volume. Nothing. Just a manipulation leg printed lower. Just a set of lows attacking liquidity and trading in the direction of opposing liquidity. That's it. Manipulation, low risk short. I'd say first leg and then second leg of distribution. It's not magic, even though it looks like it, right? It is wizardry. It appears to be wizardry, I know. It would only appear that way if I didn't show you how to do it. If I didn't tell you in advance and trade it and then give you the tools on how to do it yourself. I don't have to do that. I didn't have to do any of this. I could have not traded it. I could have not told you about it. I could have kept it to myself. Or I could have just not told you, traded it, and then just talked about something else. And just sort of like hide my trades. No. I'm not doing that. I could not teach you at all. And like I said last week, I could not teach you shit and just say, all right, y'all have fun. But if you want to hop on the signal service, yeah, I'll charge you for that. And then just do this. That's all I would have done. Is send out signals. Enter here, stop up here, aim for down there, hold one for down here. You would have been in, you would have taken some drawdown, you would have got out one, and then not out another, and then you'd have been fine. But I don't do that, bro. I don't do that. I want to show you how to do it. Okay? And I've done that today. I've done that. I do it 4 times a week for free. Come on. Again, I don't do this often. I don't really care for the projections. I don't. I really don't. And it is a lot to look at because, oh, well, you've got the 25 level, you got the 75 level, and you got the mitigation, and you got all this shit, you know, R tools and all this whatever. You can keep it simple. You can keep it simple. But you have to know if the high's been set if you're going to short for the lows. You have to know that the low's been set if you're going to target some highs. Excuse me. Carlos said, what's the name of the W candle indicator? I don't... You mean like this one? The one that displays the daily candle on it? Oh, and I'm also shorting above... Is that midnight open? That's a good way to end the fucking stream, isn't it? I'm shorting above midnight, New York. Look at that. Look at that. Oh, yeah, that one? Okay, yeah, Carlos. This is what it's called. I think it's a O, not a 0. I think it's PO3. Power of 3. It's HTF power of 3. And also, I have it set to the daily, so I just know what the day's candle is currently doing. And I use midnight New York. I don't use whatever the default is. See, like, look at this shit. How the fuck do you short above that? I don't know. But midnight New York is good enough for me. So, Ram, that's what I explained to you today. How do I know that the high's been set? Because of what I just showed you. It's a mitigation. On top of the fact that we took a short-term high and that high here, and we traded off of it. There's a high probability that we're not going to go above that high. And it's more probable that we're going to go lower. And if we are going to go lower, what are we going to do first? Go higher. We're going to fucking fly in here. It's going to go higher to go lower, right? If it's going lower, it's going to go higher first. That's why we short on the way up, or short on the way up, short on the way up to go down. Okay? Bro, I taught you, I don't know how many different trading models in here. The low risk short, that's a model. The mitigation, that's a model. That imbalance, that's a model. That 5 minute, that re-entry, that's its own model. Up candles here, even though that's late, that's its own model. God damn. There's like one flight, I can't kill him. Fucking pissing me off. He knows I'm streaming. Fucking bastard. That's how you know, okay? That's a model, that's a model, that's a model, that's a model, that's a model. I'll give you another. You want more? I got more models. I told you, bro. How many models you need? If that's your target and that high's been set, oh, look at that. 25% entry or 50% entry or 75% entry. All to go lower. Wow, there's 3 more models for you. I just gave you like 10 models. Pick one, pick 2, pick 3. Short at 25, aiming for the target. That would have done well. 50%, if you had to stop at 25, yeah, that would have stopped you out. Shorting at 75, that's very late. Would have stopped at 50, you wouldn't have got stopped out. And it went lower. Or if you entered at 75 with a 1-to-1, you'd have been fine. There's all types of ways to enter a market. We didn't even go over time-based entries either. We went over exactly 0 time-based entries. You know what I mean? It's real easy. Just divide it. There's 9 o'clock, shorting above the open of 9 o'clock. There's 9:30, shorting above the open of 9:30. If we went down to a 1 minute, we could really start to look at some closer ideas. There's 9:15. So I'm shorting above the open of that particular 15-minute candle. Oh, and by the way, this was the inversion that I played originally, was this right here, to go lower. Then I got stopped out. Then I re-entered. But that inversion wasn't bad. It did get traded through. If I kept my stop where it was, I never would have got stopped out. But I did take like 2 ticks, and then I entered like 1 point higher, which is cool. But, you know, we didn't even go over time-based entries today, but they're there too. So between all the time-based entries, between the fucking fib tool, there's at least 3 different opportunities there. So that and time-based entries, that's probably like between 5 and a dozen models. Market maker model, that's at least the low risk short, the first leg, the second leg, that's at least 3. And then the mitigation's probably like, bro, how many models do you need? They're everywhere. That's why I said only having one is stupid. You think you could get really good at free throws and make it to the NBA? No. You ain't got no defense, can't shoot threes, can't pass the ball. You're fucking useless. Or you're a coach. I know 3 plays, coach. Let me run a team. I know 3 plays. No coach in the NFL or NBA or any professional sport only knows 2 or 3 plays. They know quite a few. In trading, now, again, I don't agree with only having one model on one time frame. I think that's stupid, but how many models do you need to enter any sort of short today? And you would have been fine. Look at it. It's a down close day. And we're shorting up here. That's easy trading. That was a textbook play. That was a textbook market maker model. That was a textbook AMD. That was a textbook mitigation. That was a textbook imbalance entry. And that second projection lower was the exact price level of Sunday's gap. That's perfection when they tell you it's not fucking there. They say it's not there because they don't know it. They don't believe that it's there. I've shown you perfect entries. I've shown you perfect price reversals. Remember the inverted imbalance inside of a mitigation or inverted mitigation or whatever, and they're perfect on ES. NQ, it's a little bit more difficult. I can agree with that. But to say there's no perfection in trading is wrong. That was perfect. That projection was perfect. But hey, I'm just a guy. I just have my opinions. Sometimes I'm right, you know, and that's it. So the only other thing I would add to that was the fact that NQ had those lows. When ES rallied here and NQ left behind those lows, I was like, there's no fucking way they're leaving that. There's no way. I'm like, they're not leaving that there. They're not leaving it. Now, NQ did give a much deeper retracement higher, but it did the same thing. As far as the high, low, higher high, it took that short-term low, and I don't know if you could correct me if I'm wrong, Asia high right here. Either way, it took two different highs. Slammed lower. We got equal or low resistance lows right there during London. You got London's low as equal lows. That's one of the highest probability targets that I know. And then the Sunday gap right below it. That, like right here, probably would have been pretty nasty. Or unless it went lower first. Oh, no, it didn't. It went higher first. It went right up into the mitigation, right down to those lows. That would have been perfect. But I didn't trade that. So, but yeah. How is it boring, Ensign? Don't be one of those ICT copycat goobers. Okay? You're better than that. We don't do Twitter shit over here. Price action sucks. This is boring. It's not boring. It's not boring at all. So, I'm not trying to piss you off or like talk no shit, but I'm just saying, what's boring about that? What's boring about sniping in and sniping out? What's boring about that? It's not. Trading should be boring. No. No. Trading is fun. Making money is fun. That's it. That's all I got. Okay? Y'all be good. Y'all be blessed. I threw a lot at you today. I tried to always throw a lot at you. But, you know, we talked about projections. We talked about gaps. We talked about AMD. We talked about market maker sell models. We talked about various models. We talked about premium discount. We talked about lazy traders entry. We talked about concepts off of concepts. We talked about manipulation, high probability mitigation. We talked about a lot of stuff. All for free. All for free. So, be good, be blessed. I will see you tomorrow on Tuesday the 8th for another free live stream. All right? Don't do anything stupid. And I'll see you then.
let you go.